Good day everyone, thank you for joining me. My name is Matt. I cover Naspers and Prosus, and in this presentation I'm going to discuss our latest report which covers the recent events surrounding Naspers, Prosus and Tencent. Of course, the big event is the voluntary exchange offer, which was first proposed in the beginning of May. Essentially, it gave Naspers shareholders the option to exchange part of their shares for newly issued Prosus shares, and that transaction would result in a cross holding between Naspers and Prosus that has now been accepted and implemented. This has led us to increase our holding company discount, which has affected our valuation. And then, while all of the above took place, the Chinese regulatory environment intensified significantly, and that led to a sell-off in Tencent, and that impacted Naspers and Prosus as well. So all of that leads us to recommend an underweight position in Naspers and Prosus. So looking at the event timeline, we've got the voluntary exchange offer, which was announced in the beginning of May. On the 25th of May, we issued our special report in which we shared our view that we think the transaction is unattractive. Not long after that, there was a letter signed by 36 asset managers sent to the boards of Naspers and Prosus, in which they also expressed their collective dissatisfaction and concern for the proposed transaction. In July, the market consultation, in which market participants were given the opportunity to weigh in on the capping methodology of Naspers and Prosus in the JSE Capped Index, that deadline was extended. Feedback for that is expected on the 20th of August. In July as well, the voluntary exchange offer proposal was approved at the Prosus EGM, and not long after that, the Prosus prospectus was issued and the exchange offer was opened. By the 13th of August, the minimum acceptance condition had been satisfied, which meant that the proposed transaction would be implemented on the 16th of August. While all of the above took place, the China tech crackdown intensified, and that obviously impacted the share price of Tencent, which also impacted the prices of Naspers and Prosus. Looking at the impact of price, this table gives you a snapshot of the impact that the recent sell-off has had on the performance of Naspers and Prosus relative to the benchmark. It has brought the year-to-date performance negative compared to the JSE Capped Index, which is up 15%. Naspers is down 14%, Prosus is down 23%, and Tencent in Rand is down 19%. So looking at the impact of the transaction, so it obviously impacts the shareholding between Naspers and Prosus. Naspers remains the majority shareholder, and it owns 56.9% of Prosus, and it owns all the voting rights. Prosus owns 49% of Naspers. The economic interest in the underlying assets is owned 59.7% by Prosus and 40.3% by Naspers, and the transaction will result in the weights of Prosus and Naspers in a number of indices changing. Depending on the outcome of what the market consultation is with the market participants regarding the capping methodology for Naspers and Prosus, there's potential for the combined weight to be capped at 10%. We'll know the outcome of that on the 20th of August, and thereafter we should see any implementation take place at the September quarterly rebalance. So just on the assessment, the discount to NAV has widened post-implementation of the transaction. Prior to that, we saw the discount narrowing as the price of Tencent fell faster than that of Prosus and Naspers. Our target prices for both companies have decreased as we've widened our holding company discount. On Prosus, we've widened it from 25% to 30%, and on Naspers, we've widened it from 15% to 20%. And this is to account for the increased complexity of the cross-holding structure, which we believe will make it very difficult for management in the future to realize net asset value. Further attempts at reducing the discount has been severely compromised in our opinion. And then on top of that, we've got the increased regulatory risk in China, and the market has discounted Chinese shares by quite a lot, and we think that is going to put a lot of downward pressure on Chinese tech companies, specifically those with VIE structures, and we think it's going to take a while before confidence returns. So the primary driver of share price for Naspers and Prosus, which is Tencent, has got significant headwinds. So taking all of the above into account, we are recommending an underweight position in Naspers and Prosus. If you'd like to place a trade, please speak to your financial advisor or contact the dealing desk. Additionally, our reports on Naspers and Prosus can be found on MyBase. Thanks for tuning in. Before we end off, please take note of the following disclaimer.